Vid number 2, Saturday. I may have to do 3 today, actually. These next 2 should be pretty short, at least this one. Boy, if you had $1 every time I said that and kept rambling on for 15 minutes, you'd be pretty rich. But Simon Black, again, sovereignman.com. World's largest hedge fund manager predicts bleak future for markets. How is that? How is that possible? Markets rallying. Dow Jones, all-time high. S&P, all-time high. NASDAQ, all-time high. What's going on? Why would any, much less the world's largest hedge fund manager, predict a bleak future for the markets? And I got to tell you, I hope when it goes down, something inside of me telling me, Jay Snip, just wait before you, because I've been telling you how I want to purchase some shares of Keith Neumayer's First Majestic Silver Mining Company. There's other ones, but man, there's just something pulling me to that one. But on the other side of it is there's something saying not yet, not yet. But it's only $10 and some change. It's good time. No, not yet. Don't do it. Wait for the big one. Because I looked at their stock back in 2008. Ooh, boy, did it go down. It was quite high. It was like, I was going to say 30s or 40s. It may have been like 60 or 70 actually. It's down. It's $10 right now. But if a big crash comes, end of this year, next year, whatever, that's when you want to buy. But if gold and silver start rocketing upwards, how does that affect their, you know what I mean? So it's one of those things where damned if you do, damned if you don't. Like, should I, it's only $10, but, spend $1,000, spend $500, but just to get a few shares, get some shares. And then if it goes crap at the end of the year, if the markets crash, then buy some more, Maybe I'll do that, but somebody has about $5,000 or $5,200 worth of IRS taxes he has to pay, unfortunately. But it actually feels better knowing that Donald Trump's in the White House as I'm going to make this payment. So that's okay. There are lots of famous investors and hedge fund managers who are legendary stock pickers, and Warren Buffett, for example, that's a great example, he says. Others are hardcore quantitative analysts who build complex trading algorithms. Ray Dalio, the billionaire founder of Bridgewater Associates, is neither. He's a macro investor whose fortune was built on an uncanny ability to spot big macro trends. He predicted in 2007. Remember how I said there was a few people who made an absolute killing in the 2007, 8, etc. housing crisis because they saw it coming. And I think if I'm going to get down to where I think I am in this article, I think it was in here, he warned the government, this is not going to end well. This is what we're seeing. You need to stop this nonsense with all this, and everybody's approved, all this crap. He warned them, and it happened. So he says in 2007, he predicted the housing bubble would burst. He warned the Bush administration that major banks were on the verge of collapse. The government ignored him. After the 2008 collapse of Lehman Brothers, Dalio immediately recognized that the Federal Reserve would have to print trillions of dollars to bail out the system. So he positioned his firm for big profits, buying assets like gold and foreign currencies. Dalio was right again. Now, he has a new warning for anyone who's willing to listen. And I sure as hell know I am willing to listen. Again, I like being that fly on the wall. And a guy like this, he's not some kind of insider that I have to guess, why was he in there in this meeting? What did they talk about? Well, they probably... No. He saw it coming a mile away and has been completely publicly vocal about it. So it's these kind of guys, track record, clear thinking, they understand everything, they warn the government, nope, everything's fine, don't worry about it. Got it right. And now he's positioning himself, and I guess his portfolio he manages, or I guess it's the hedge fund, whatever, to take heed of what's coming and do something about it. So, says in October, so few months ago, whatever, he admonished a room full of central bankers in New York that there was simply too much debt in the world. Now, this is interesting because I've been doing quite a few videos this last week about debt, more debt, auto loan debt, housing debt, debt, credit card debt, student loan debt. There's more debt. 3 times debt to GDP ratio in the world. I mean, I'm doing these videos like rapid fire here recently. So this is like real, I would say more confirmation. This is super confirmation. We're going to have some problems. Big. So he says, in this room full of central bankers in New York, he told them there's simply too much debt in the world. At the time, total global debt was an astounding $152 trillion. That is an astounding amount of money, is it not? The debt since then is now up to $217 trillion. Now that's interesting. In October, November, December, January, February, 4 months, at the time, total global debt was an astounding $152 trillion. Total debt now is $217 trillion, according to a report published last month by the Institute for International Finance. Now that's interesting. Are you telling me it went up that much in 4 months, or is what he's saying here talking about back in October 2008 when we did all the money printing? He doesn't say, but it sounds like he's talking, because he said back in October he talked to these federal. At the time, total global debt was $152 trillion. Total debt now has risen to $217 trillion, according to a report published last month by the Institute for International Finance. And as Dalio points out, this has consequences. No kidding, right? I mean, good. He's trying to tell it to you. Plain as day. We can't keep doing this. You can't just credit card your way out of stuff. Yet that's what we're doing. That last video I just did the other day, yesterday, whatever it was. Credit card. Whoa. I said, whoa, credit card is even higher than the cars and the student loan? Oh, that's interesting. The percentage that it jumped. Why is that? Because people don't have freaking money. Just go into debt. So he said in October, he told them there is only so much one can squeeze out of a debt cycle, and most countries are approaching those limits. Governments often go into debt in order to finance big spending projects which stimulate economic growth. But eventually, the amount of growth you can generate from debt reaches a point of diminishing returns. We can already see plenty of data to support this assertion. China has taken on hundreds of billions of debt over the last several years in order to maintain its economic growth. But measures of China's debt efficiency now show, according to the Wall Street Journal, that it takes increasingly more debt to generate the same GDP growth. So what does that mean? What does it mean? I'll tell you what it means. You're a junkie. You just started though. And you're giving yourself these shots. Makes you feel good. You get high, you come back down. You don't need another shot for a couple of days. Matter of fact, you start off once a week. Then it turns into once every few days. Then it turns into once every other day. Now it's once every day. And soon to be 2-3 times a day. It's because you're getting diminishing returns. I'm not getting as high as long as I used to. I got to take more. I want to keep my high up. Got to take more. Keep my high up. So what happens? The junkie or druggie is putting tons of drugs in his body, his or her body, because he or she needs that quantity in their body to get back to where they were all those years ago when I used to do once a week. And it would last me. I remember being high for a full day or two. Yeah. Now, I'll do it 3 times a day, and I won't by the end of the night, I'm already off. I'm already down. This is my analogy for this, but this is the same thing. Just make more debt. Oh, we feel good. Economy shrinking again. Oh, more debt. Economy, good. Back up. More debt. And then, again, diminishing returns until you're throwing debt and it's not even doing anything. That's when it ends. And according to this gentleman, who has a pretty good track record, the time is near. He says, So China is rapidly reaching its limit in terms of how much economic growth it can squeeze from its debt. Debt, i.e. government bonds, are supposed to be boring, low-risk investments. Grandparents buy government savings bonds for their grandkids. Retirees, pension funds hold them as risk-free. Retirees and pension funds hold them as risk-free, allegedly, assets. But in a recent piece written by The Economist, Dalio suggests that the bond market is risky now and will get more so. Rarely do investors encounter a market that is so clearly overvalued and so close to its clearly defined limits. He bleakly projects that investment returns will be very low and that investment risk will increase, i.e. the reward to risk ratio will worsen. Dalio concludes his piece predicting that savers will seek to escape financial assets and shift to gold. I love gold. And similar non-monetary preserves of wealth, especially as social and political tensions intensify. Banks had spent years accumulating $1.3 trillion worth of no-money down mortgages made to unemployed borrowers with terrible credit. How's that going to end? What did he say? The only sentence in this whole article, which there's more, I don't even need to read it, because that's gotten to the point where I wanted to discuss this. This is it. They will shift. Savers will seek to escape financial assets. In other words, paper. Paper, as in it's not written worth the paper, the value of it is not more than the paper it's written on. So how much is that piece of paper? A penny? Yeah, that's what you owe now. So when he says financial assets, I don't think he really meant the word asset. Again, on paper, it says asset. In real life, when you have one of these and you're holding it up, you put it in your hand. Ooh, let's look at the pandas playing. What are the pandas playing with? If that was me and some other panda, we'd be playing with a little stack of silver, flipping it around. That's what we'd be doing as pandas. You hungry? Nah, I'm going to keep flipping this coin. It looks so beautiful. You hungry yet? Nah, I'm going to keep flipping this coin, man. Love this coin. Even though, so obvious a panda could figure it out. But seriously, gold, silver, this is a guy who saw all this coming, warned the government, was just talking to some Fed people in October. What does he say? Precious metals. That's all I need to know. And honestly, that's all you need to know. Take care.